May 10th, 2019, it's Friday. Time to make some money, guys. I got a lot of you asking me this morning, oh my God, why isn't the market crashing yet? They placed the tariffs. What's going on? So we're going to take a look at the charts. Guys, sometimes things just don't happen as fast as we want them to take place, but the charts point to a definite drop further from here. So here's some key observations from the day before. We actually got a fourth bearish gap down that was created per market that was not closed intraday, guys. That's 4 bearish gaps in a row. That is something to definitely pay very close attention to, because this could be just the beginning of a much bigger drop. So the question, of course, is why haven't the markets crashed yet? No worries, guys. It's about to go down. Number 3, very important. Everyone is so bullish right now that once the selling begins, it could actually produce a very sharp drop in the markets. The key levels we're observing today is 28.52, 28.36, 28.11, and 27.75. Observe volume to determine your entry. Yes, we are buying puts at the open. So let's take a closer look. Nikkei in Japan is a confirmation that global indexes are on the verge of breaking down one more time. So it created this beautiful gap right here, guys. Check this out. And now it's actually trading 3 days in a row. The importance of this is such that, look, last time it broke for this 50-day moving line, look what happened. It bounced promptly right back up, right back up. So it barely stayed under the line. The longer an index or a stock stays actually under a key level, like a 50-day, a 200-day, the more bearish the situation actually becomes, especially when it's confirmed by other indicators such as, for example, MACD, right? It makes this crossover. We get this prompt, huge gap down. I mean, this gap down is huge, guys. It closes this bullish gap that we've discussed in the last few videos. But now, the most important observation is we're under this 50-day moving average for 3 days in a row. So as bullish as this chart has been, this is your TRO. This is your trend reversal opportunity. So yesterday we pointed this chart out that Japan has been creating this move 3 if we look at a 5-day time frame. And more importantly, this is how it looks now. Now it's actually looking bearish as hell, because not only has it been creating this move 3 type environment for multiple days now, where we're just creating a series of lower high, lower high, lower high. Now it is also followed by a head and shoulders. So when head and shoulders, guys, is preceded by a gap down, like in this scenario, this is a triple threat, right? So the triple threat, meaning you get a gap down, which is highly bearish. You have not just 1 or 2 or 3 days of lower highs. You have a series of consecutive lower highs that are continuing. So this is a trend. This is a bearish trend at this point. And all of a sudden, you're getting a head and shoulder. That's a triple threat right here, guys. I think multiple times when I've seen some such developments on the chart, we were heading much lower. And for those of you that are trying to make sense of these head and shoulder patterns, right, look at this. This is actually on a smaller time frame. You can clearly see this is the shoulder, this is the head, this is the other shoulder, and this is actually pre-market around 6-7 o'clock as I'm trying to record this. And look, also you got, what does this look like? This looks like a pyramid. This looks like a move 11 in the accumulation distribution, which coincides with this situation right here. The important thing, guys, and look, if you haven't taken the charts divergences course, make sure you do that, because I point out some really precise details which oftentimes we don't have the time to cover here, which is going to help you understand these things much better. Notice this top part of this head and shoulder formation. At the very top part of the head, where the head part of the formation is stopped out, look at the volume. Do you see there is no volume? When we actually reach this stop at 21.6, there is no volume. The volume is dying out. It's drying out. The volume is literally absent at these high levels. That is a main characteristic of a head and shoulder formation. Okay, there's a clear sign that nobody's buying at the stop level right here, and therefore it's followed by oftentimes by what you see right here. Keep this chart pattern in your mind as we're going through these slides, because it will keep showing up again, and again. Remember, I often stress that it's important not just take a look at one thing to make observations, but if we see multiple confirmations, not across different stocks, but across multiple sectors, when we see multiple correlations developing on different time frame of the charts, then we're building a pretty solid case of what's about to take place. So we simply can't ignore these signs right now. We cannot be doing this, guys. The reason the market did not drop yesterday, okay, is because we're hitting well, I should say did not drop much more than what it did yesterday, because we did get a bounce at the end of the day again. But we're sitting at this 50-day moving line, and this 50-day moving line, it's a very controversial point for the markets. So in other words, some institutional investors, they're highly bullish. As a matter of fact, predominantly 90% of institutional investors are highly bullish. So does that make sense that we just go ahead and load up on a bunch of calls here? No. As you know, in September, October, November, December of 2018, there was same bullish sentiment among institutional investors. They were all unanimously bullish. Do you remember watching the news media, how they were saying, hey, oh yeah, we're going to get the Santa Claus rally, and we're going to get this, and they all had the same opinion on the markets, that the market was going to break out in November, December, it was going to go higher, but exactly the opposite took place. So in the video I posted yesterday, talking about how short the memory of the market really is sometimes, all of these guys that were projecting crazy stuff like that, they were caught in a surprise, they were caught in a shock. And the market is so complacent right now, trading all-time highs. I think we're just about to get a huge wave of selling, which could, our projections, as you can see right here, 27.75, this could end up being very modest going into the next 2 weeks of trading. In the latest video that I posted about deal, no deal dance on the charts, right? I've pointed out yesterday's move incorrectly because at the time I was recording the video, it really indicated a sell-off going into the close, pretty much identical situation to the day before. So at the time of recording the video, I've logged it as an 11, but clearly towards the very end of the day, the market spiked and closed pretty much close to the levels where we're trading around 9:30 in the morning. That actually makes it a 12 with a clear characteristic and behavior of a move forward. Let's take a closer look. So this is how it looks. Remember, when you're going for the 13 market moves formula, it identifies these 12 moves kind of like a smiley face. You put the two eyes right here and you draw this, use your imagination a little bit. It's kind of like a smiley face. And sometimes the characteristic of a move 12 is exactly the opposite of a move 11. But one thing they do have in common is they're going to open up and close really at about the same levels. So if you take this measurement 9:30 right here, we're opening again with a gap down, sold off sharply later to a level of 28.36 and then bounced. But we closed roughly around the same area where we're trading around 9:30. So same level of open, same level of close with a definite slight lower intraday. And that actually makes it a move 12. So one thing though is we're going to get to in a second, move 12s don't happen very often in a higher VIX uptrending environment. So this is kind of an oddball here. Clearly it did have the behavior of a move 4, which we observed in the markets, how they like to, the bulls like to show up in the second half of the day. We've seen that Monday, Tuesday, we've seen a change of that behavior on a Wednesday, and so now we're having a repetition of that behavior one more time. One important thing I did want to point out is yesterday was quite different as far as the drop. When this drop happened, it did take place on rather smaller volume in relation to the spike higher. So the spike higher this time happened on a higher volume. So if this behavior persists, we may have to rethink some things here, but if it's just one odd day where people were full of hope that the deal was going to happen, it makes sense that maybe some selling subsided, or the selling did happen, clearly did happen. We saw briefly this move 6 behavior heading into the close. It was drawing that pyramid again, but at the latter part of the day, last hour actually picked up here. So important observation on the volume here. I don't think it's anything to worry or be concerned about quite yet, because That again is the only thing that is a concern that could be preventing the market from severe drops from here. Again, the important thing about the market move 12 is typically it doesn't happen in high VIX uptrending environment. So therefore, the probability of it repeating itself, as you know, market move 12 has a high probability of repeating itself. Sometimes we have instances where we have a 12 followed by a 12 followed by a 12, which in a way looks bearish because the market keeps gapping down every day, but these gaps are not, they become smaller and smaller with each day, and that is something to be paying attention to. However, it doesn't happen in the rising VIX environment. So if we keep making very good observations about the VIX, we should be able to interpret this move 12 correctly. So far, the way it appears to me, it should be interpreted as a weak attempt by the bulls to sustain current levels before further drop in the market. So the 2-day sequence is 11-12. This is was preceding that sequence, right? We had a 3 followed by this 11 pyramid. We've noticed this reversal in behavior, and that behavior reverses one more time yesterday. So we get this 11-12 sequence. 11 was the pyramid. The 12 was the attempt by the bulls to sustain these levels. But overall, what happened over the course of the 2 days, we didn't move. We didn't move anywhere. 2870 roughly is the level. However, that 2870 is almost 100 points off the highs, which were established recently, and we keep drawing these sequences of higher lows. So if we take a look closer at a 5-day sequence, which is 1, 3, 3, 11, 12, then we will actually look at this and we'll observe that these series of lower highs, we keep going lower and lower. And again, the reason we had this 11-12, it looks like because the S&P was sitting on that blue line, and there's a little bit of a fight that's happening again between the bears and the bulls. But if we look at everything else, it clearly tells us that we should continue to short these bounces because ultimately they resolve in these drops. So the deal no deal dance continues. What we're observing pre-market, remember I told you to keep a mental picture of what Japan was doing, and look, now we're looking at the S&P futures and we're noticing the same pattern. Do you see this head and shoulder pattern right here on S&P pre-market? The key levels, guys, write this down. The key levels for today are 28.52. Why? Because pre-market around 1 a.m. S&P futures dropped to a low of 28.52. The second important level is going to be 28.36 and a quarter because that was the low established yesterday. Observing this head and shoulder pattern gives us a high probability we will actually first revisit that 28.52. Ultimately, we should revisit this 28.36. As with everything we've been discussing in the last few videos, it's crucial right now to pay attention to the volume. So once we get to this 28.36, it's going to be a wise decision to take some profits unless you see this move to 28.36 happen on huge sell volume. Then do not close your position because the next level we've been clearly targeting is 28.11 followed by a 27.75. This is a picture from May 12, guys. Again, pre-market. We're having head and shoulder pattern on the S&P futures so far. What's interesting, if we take a look at a shorter time frame, okay, we're also noticing this pattern develops on a smaller time frame as well, where pre-market we're setting a series of lower highs. Remember, just a second ago I was showing you this slide right here, how on a 5-day sequence we're setting these lower highs. Now we're matching that with a lower highs setting up a pre-market. So the trend overall, the predominant trend is every time the market pops, it drops, pops and drops, pop, drop, pop, drop, pop, drop. It's the pop and drop dance, guys, on the chart. It continues. If you just focus in on coming in and making good entries in your position when the market pops, and closing them out when the market drops, it's a very easy recipe that anyone should be able to take advantage of to make money in this market environment. So again, pop and drop dance, larger scale. Now we're observing it clearly intraday. We're observing it on multiple time frame charts. So we get confirmation after confirmation that this is the predominant pattern and we should stay with it. Now, VIX is high numerically, and yesterday we posted this chart saying, okay, the 22 area could be an area where the VIX could be creating a double top. We were expecting a pullback in the VIX. One of the notes yesterday we've posted was, remember, every time VIX gaps up higher in the pre-market session, oftentimes it will give up its gains, and this is exactly what we've actually gotten, right? So it opens, moves a little bit higher, and then gives up a lot of these gains by the end of the day. But notably, VIX is really strong. It is definitely in an uptrend. It's holding this level of 19. Now, one condition on which we should consider cutting our put positions is such that VIX falls below 1829. 1829 is this area right here. This should serve as a support level for the VIX today. If you see drop below 1829, that would be the area to cut your put positions and search for a better entry. Overall, we are having a target on the VIX by Monday for it to jump to 26-28 level. Now, I know this is a huge jump. It's a 30% jump roughly, but considering the market environment and how complacent everything is, once the market open, I do believe we can get a sharp sell-off either today or Monday. Next market move probabilities are 3, 4, 11, so nothing has changed. I think that 12 move we have gotten is an outlier move in the midst of these market conditions where the bulls are hopeful and they're predominantly all institutional investors are bullish, but I think they're coming to a conclusion that maybe it's time to unwind some of these positions. And once it starts happening, it's going to be like a domino effect. You'll see people start coming in and selling, and that sell-off could accelerate rather rapidly, especially if we don't hold these levels of 28.52, 28.36, 28.11. If these levels don't hold, we can get a very, very sharp sell-off. So it really pays to hold on to your positions, guys. Now, one area to consider, again, closing your puts if VIX drops below 18.29. So keep that in mind. Run the VIX chart. So, guys, nothing has changed as far as the strategy. We're shorting the tops. We're shorting the bounces that happen on low volume. We're expecting bigger drop next week. Not necessarily today, but we're calculating a rather big drop next week, so it really makes sense to buy next week expiration on indexes and stocks and VIX. So by 10:45, we are targeting by 10:45 a.m. today a level of 28.36, and then clearly observe the volume. If the volume is strong on the sell side, and we're starting to see this domino effect, people, institutional investors, despite of what they're saying, just like what we've seen in November, December, everybody was saying it's a rally, it's a bull rally, we're hitting record highs. But what they were really doing, they were liquidating their positions lightning fast. There's a high probability we could go into an environment like that. So I wish everybody an awesome trading day. By the way, BKNG is creating that move 11, but it's holding that level pretty good, especially that it missed on earnings. We will likely trade BKNG on the put side today. Now, the best strategy would be to buy puts in the money. So trade it within probably the first 10-20 minutes. I would wait till options take a much heavier depreciation and maybe come in at the level of buy some 18-20 puts, 18-30 puts on BKNG. So far, it looks like a reasonable trade. Guys, have an awesome day. We will have an insanely awesome week next week. Let's rock. I'll see you guys in the next video.